This is our Forex blog for March 12th, 2012, and a lot of new traders are overwhelmed with all the 20 or 30 amazing tools that are in our software and different ways of trading and so forth. So I want to focus in this Forex blog to show you one of the easiest ways of trading, and that's using our currency meter. We statistically compare every currency to every other one using multiple different time frames, different statistical tools, and we average it together into a very accurate real-time tool. When you have green and it's above, at or above the 80 dotted white line here, you have extreme strength. Underneath that we had a daily, weekly, and monthly trend, and you can see the dollar is strong on all time frames, especially when you see a pattern like this. Extreme strength followed by the pullback of very little weakness in a very short amount of times. Each of these is one bar. This tool, by the way, has 3 different tools that measure direction and 2 that measure intensity. So the only time this can possibly mathematically get over the 80 level is when 80 to 100% of the dollar pairs are going up, and you're doing so with a decent amount of intensity, or else you'll see something like this. So this pattern is very likely to continue. It's more likely since the daily, weekly, monthly trend is up. Unfortunately, it only continued for about 20 minutes. But during this time here, after about 15 minutes, you're looking for a pullback. 120, 125 you're looking to buy. Which one is the weakest one at that time? The Swiss was weak. The Australian was weak. This one wasn't. So basically you would be trading the dollar against the Swiss or the Australian. You'd be looking at that 1 o'clock time, 120, 125, to be selling the Australian dollar. So let's bring that one up here. Here's a little pullback right here, 120. Right here, you go short when it starts to go back down at 32. It comes down to 18. It didn't go down a significant amount of pips, but this 10 pips down is really all you need to do very well trading. We have a trade analyzer in our software that allows you to do planning. Let's say you have a $2,000 account. If you get 10 pips per day and you start with a $2,000 account just trading 4 mini lots at a time, if you make 10 pips a day, your account over 1 year grows all the way to 258,000. So you pretty much can double your account every 2 months, getting just 10 pips a day. So keep that in mind when you. A lot of new traders have very unrealistic pip goals. They want to make 40 or 50 pips right away. They have no experience trading. They don't know support resistance or Fibonacci's or many of the other methods that we use. But something as tiny as getting short right here at 32 and getting out somewhere down here, pretty much meets your daily requirement. And you have this resistance area right here when the market came up and did a little mini double top right here with less strength the second time. The daily, weekly, monthly trends down, and you can go short right here and notice the trailing. It comes down to the previous week's low and finds support at 12. This is a nice 28 pip move. So that's almost 2.5, 3 days worth of profit on this trade. And you got to pull back up here again. It goes sideways, starts to go down here at 28, and if you got out of the trailing stop right here, you made about 30-something pips. Again, just those 3 or 4 trades has an entire week's worth of profit. So even if you trade 1 or 2 days a week, if you're able to have big wins like in these trades, you can meet your weekly requirement in 1 day. Now again, the Swiss also was weak. So we want to buy the strong dollar versus the weak Swiss at 122, 120 to 130. So this one's just kind of going sideways. It's got a little flag pattern. One of the methods that I use is when it breaks out, I'm in. And you can see again, this one really wasn't that profitable right there. It went from 13 all the way up to 18. Your stop would have been underneath there. Anytime you get some counter trend signals like that, you might want to move your stop to break even, but you might have lost 2 or 3 pips there because the Swiss, as you can see, shortly after that became very strong, and shortly after that the dollar became very weak. So as you're watching this currency meter, I have a 4-monitor system that I use, but I recommend at least 2 monitors. Set this up, and you don't have to make them as wide as this. It can be the size of these right here, and you can also put them on a layer to show and hide it. If you want to get rid of your chart, you just uncheck it and it disappears. So you can do the same thing with the blog there. Get rid of it when you're not using it, but it's always advisable to leave it running. Let's look for some other trades. You can see a lot of weakness here, followed by a little bit less. Some strength comes back in at 6. And especially when you have a lot of strength right here followed by almost no weakness, that strength's likely to continue, just like that same pattern before. So at 8 o'clock, we're looking to buy the dollar versus one of the weaker ones. Well, one of the weaker ones at 8 was obviously the pound. Pound was very weak. The daily trend shifted down. The weekly trend shifted down. The monthly's down. You want to sell the pound dollar coming up to 8. This one had a big drop off. It retraced back up. It's kind of going sideways right here. And so I typically wait for it to drop down right here. And you can see it fell from 32 all the way down to 07. So there was over a 20 pip drop right there. That's 2 days worth of trading profits in 1 day. And then you got another pullback again where you might have went short right here around 30, had your stop right above the high. You can see that one pull back again. It went back up again. And notice extreme strength on one bar. And then as it's going sideways right here, the strength disappears. The trend's down. And notice the low also is our Fibonacci profit target. I do these and spend about 30 or 40 minutes every night so you don't have to yourself. And another way of trading is using our range charts. This is personally how I trade. I oftentimes wait for the intelligent trailing stop to get me into the trade. So I'm short at 32, out here at 19, short again at 29, out here at 19. And usually when I see a pattern like this where it goes up, down for 5 bars, I'm typically in the trade. I a lot of times anticipate the trailing stop getting hit if it's only 3 or 4 pips away. So I probably would have shorted this at 26. And then when it came back down, and it's not able to break the low right here, and you can see the weakness is disappearing. The stop's going to get hit, so you're out. But you can sometimes make a few more pips. 26 out at, let's say, 16, 10 pips. You know, again, one little tiny trade like that is your 10 pips for the day, and that's all you need. Let's look for one other trade, though. In fact, coming up to 6, you can see the same pattern. A lot of weakness followed by very little strength. At 7 o'clock, you're at 640 right here. The pound is likely to be weak again. 640, let's look at it. So that's right here around this time. Anytime the hourly moving average acts as support, but it doesn't get a nice bounce off of it, when it breaks down underneath the hourly, in this case, I think the previous week's low is right there is 2. You're short at 62, and it just goes down. Notice how tight our trailing stops are on range bar charts. Plus, if you're in a trade like this and you see it get at and above the 80 level right here, it's still above it, still above it, still above it. There's nothing to worry about until you start to see, you know, some of the weakness disappear and go back underneath the 80 level, which is right here. This was the first time on this bar right here you might be concerned. So if you want to exit half your trade, that's fine. Or if you want to put your stop right above that bar's high, that's a very good idea. A lot of times I do that, especially when you have a nice big profit like this. It pulls back down again. And usually when it's underneath the lower containment band, it's going to reverse. And that's exactly what happened.